Welcome to Drill on Earnings. We have quarterly results out from Workday, one of the 50 most important companies in technology. Fascinating software company, kind of the Salesforce of HR and finance. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. And we think it's one of the 50 most important companies in technology, definitely. Q1 2026 earnings are in a fiscal quarter that's off the calendar year a little bit. It's better than estimates. Nonetheless, Wall Street didn't like these numbers. So let's talk about what we saw and dig a little bit deeper. So $2.4 billion and $2.24 billion in revenue, up about 13% on a year-over-year basis. But that's the slowest growth rate this company's ever had on a year-over-year basis. Subscription revenue is up 13% for this company, and lots of important milestones with certain products. And I want to talk through some of that when we go beyond the headline numbers, look at what's really going on. So making money. These guys really manage to stay as close to break even as possible. Among other things, it helps them pay less taxes. It also helps them invest in their business. But yes, it's profitable now and has been for 2 years, but only 2% operating profitability on a GAAP basis. Let's talk about products here. This company has really, maybe more than any other software company, I think, addressed using AI in the products that they sell and using agentic AI, those AI agents that complete tasks for them. So AI product annual contract revenue, they say more than doubled on a year-over-year basis. 25 to 30% of customer expansions, they say, customers spending more, include at least one AI product, such as a recruiting agent or their Extend Pro, things that manage many of the things in the recruiting process automatically. Or at least that's what they say they do. I haven't used the product, so I'll believe them. They seem like nice people. They also talked about their full suite wins, so selling a lot more when they do sell. 30% of new customer wins were for full Workday suites, including their financials product, which is, in the history of this company, relatively new. And in verticals like healthcare and higher education, that figure exceeded 50%. So in certain sectors, higher education doing really well, healthcare doing really well, because they're selling that massive suite. Now, they also talked a little bit about the federal sector and about that, and I want to get to that. But the thing that bothered me about these results, maybe bothered Wall Street more so, was their backlog. Backlog tends to take a little bit of a slowdown. That's the long-term orders of product going forward. In the first quarter, this first fiscal quarter, their backlog does tend to come down. We saw it a year ago. We saw it 2 years before that. We saw it a year before that. But, a negative backlog number just isn't a good look. And the backlog being down 2% sequentially, again, the growth rate has slowed in the first quarter, but a negative number we have not seen from this company in my memory, certainly. And indeed, the near-term backlog, the backlog that's going to be fulfilled within 12 months, was at 0. So again, that number takes a dive in the first quarter, the April quarter for this company, but it certainly took a dive here. Now the result was, I think, that may be why the stock took a dive as well. Down 7% in after-hours trading, not recovering during the conference call. The stock's up only 5% for the year, with a S&P 500 of 10% for a year. 5% gain is just not keeping up with the Joneses. Now, I mentioned the federal government. So the companies for a long time talked about the federal government as a growth area. So is the federal government moving away from installed systems to moving to systems on the cloud like Workday offers? And the question is, of course, what's happening with federal government cutbacks? What's happening with DOGE? Is less spending by the federal government, is cutting people's benefits and so on bad for an HR software company, which is fundamentally what Workday is? And CEO Carl Eschenbach really pushed back on that notion.
I think Lynn is having a tremendous impact on our go-to-market initiatives and driving our product and technology teams to deliver a highly secure platform for the federal government. I will tell you, we're very pleased with the level of conversations we're having and the depth of conversations we're having across all civilian agencies, DoD, and the intelligence community. They absolutely see the value of Workday to help them modernize an antiquated infrastructure that sits on premises today. And we think that represents a really huge opportunity for us going forward. And we should remember, GE does not mean government elimination. It means government efficiencies. And in our conversations with them, they're saying they're willing to invest to drive efficiencies in the federal business and create a new employee experience for our U.S. federal employees.
So I'm not going to say he's a fan of DOGE. I don't want to put words in his mouth. But the notion that creates the opportunity is something that we have heard. The CEO of Elastic, Ash Kulkarni, who we talked to a lot about, I remember talking to him in Washington, D.C. just about 8 weeks ago, saying that there were opportunities showing up in federal government work where former incumbent players are becoming dislodged by Doge, and maybe that's happening for Workday as well. But what's it all mean? What's one number that tells us a whole lot? What's your big drill down earnings takeaway? Well, I've got that. So Q1 2026 earnings from Workday tells us that a $2.24 billion quarter is good and a 13% increase over the previous year. But it is the slowest growth we've seen for this company in a long time. And the backlog number might be the reason the stock sold off in after hours. The backlog number on a sequential basis is almost always, the growth rate is down in the first quarter, but negative 2% is the worst backlog performance we've seen from this company in memory, which might explain a slight sell-off in this time. Otherwise, a pretty good quarter, an interesting quarter at that. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.